Hey guys, how are you? Andy Suku, founder and CEO of Y2K Credit Solutions. So today I have to talk to you guys about this whole thing I've been talking about for a while, about being your own bank. You guys heard me say that quite a few times in quite a few videos. Even I think up to like 2008, maybe in 2008 is when I started talking about being your own bank. How everyone could be their own bank. And over the last couple of months, I've been talking about that now. So everyone can be their own bank. Y2K is doing it now. It took a while. There was a lot of compliance behind it. And we're still doing the traditional mortgage. We still have partners that we're doing the traditional mortgage with. But this portion of the Y2K product that we're offering now is for hard money projects. So if you're an investor, you're looking to do hard money loans, you're looking to do fix and flips, you're looking to buy a property, refi, and you just don't have the capital at the moment, or you don't have the credit, but you have a good deal that's on the market and you don't want to lose it. And in the meantime, while you're fixing your credit, you still want to capitalize on the market and get this property and hold on to it. We can help source and fund that project for you now. Okay, so let me just go over it's quick terms, nothing crazy. And most companies have almost the same terms. Now this is also, it's a little more stricter with me because we're putting up the money, right? So we just want to make sure that the guidelines are met to make sure that we're being paid back, right? Obviously, we're here to lend the money to make money, right? You got to spend money to make money. So, we have a little more stricter guidelines, which I believe most hard money lenders I work with in the past for other clients have kind of almost the same requirements. But the reason why I'm starting this project up now is because we have a lot of clients, and I kind of want to make the offer to my clients, past clients, current and present, and future clients. I'm kind of making more for my clients. I'll entertain outside business, but I like to keep it more within my clients because I already know your portfolio. I know your history. I have a relationship with you. There's a little more trust built there opposed to starting from scratch. Okay, with the terms, it's 1 to 2 years. You can hold the money for 1 year, 2 year. If you just want to do 1 year, whatever it may be. The 1 to 2 years came about because construction is a little more expensive now. Things may take a little longer, materials a little short. We have a lot of things going on in the world right now, a lot of changes that's going on. So things may take a little more time to get done. So I understand that. So I'm doing the terms of 1 to 2 years, 10 to 12% interest, fixed rate, right? That's the rate, 10 to 12 to borrow the money. 2 to 3 points origination fee. And that can be altered. All depends on the deal that's on the table and what's involved with it. So things are a little bit negotiable. It's not too negotiable, but there is room for negotiation. All depends on the deal and what's on the table. 85 up to 85% LTV on the property. So you have to have a little skin in the game as well, which most hard money, you have to have a little skin in the game as well. But as you know, there's so much going on with hard money scams now. There's a lot of people saying, they got the money, but their credit shot, they can't refi the property, or they couldn't get it done in time. Now the hard money owns the property. They took it back. So you have to have a little bit of skin in the game. I know a few people that's doing 100%, but their guidelines and criteria is very, very strict, very strict. It's almost impossible to get a loan from them, but they do it. But you have to be a high net worth person to do it, get it from them. This one is very important. You have to have done 2 or 3 flips under your belt before we engage into this transaction and this business. If you're new to the flipping game, or even just doing hard money, unfortunately, I cannot take your business. I'll be very transparent with you. It's very risky. And even if you had a partner on the 1 to 2 project flip, or buying, selling, holding, whatever you may have done, even if your name was on the contract, the fact that you were visible and on the project in real time, first-hand experience, we'll accept that. But if you've never done a flip or did hard money loans, and it's your first time, unfortunately, I wouldn't be able to take your business. So you got to understand that, because if you don't know what you're doing, and now you lose your property, you lose the money, who's going to pay us back? Where's that funds going to come from? Which brings me to the last key important part is that you have to have a little bit of equity stashed away. Because if your deal doesn't go well and you end up losing, we have to have somewhere we can get this money back. All right. Hard money in 2017, 18, the guidelines wasn't as strenuous as now, as current times. So, a lot of people may not tell you that. I'm telling you how it works in my office. And I'm pretty sure it's the same guidelines for most hard money investors because no one wants to lose their money, right? But they're not saying that up front because they want to get the application through the door and just get you in there and come to find out the deal is not going to work. So it is a little more stricter on my side. But if you're looking to get into if you're looking to do another flip, or you see a deal that you want to buy, but you don't have all the capital right now, your credit score is not as up to par as needed, definitely reach out to us. And we would love to look into like investing with you and getting this project going for you. If you have any questions about this topic, drop a comment below and I'll try to answer you guys back. Talk to you soon.